morning from our global headquarters in New York. I'm Menace Cranny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
The S&P closes above 5,500 for its first time in history and its 32nd record this year. Powell signals that the inflation is on a downward trend. Sentencing delay. The Supreme Court ruling pushes back Trump's day in court by 3 months, while Biden blames travel for his poor debate performance. And are we finally there? Skydance is said to offer a higher valuation to close the deal with Paramount. Good morning, Menace.
Danny, good morning. I just can't wait until that family actually strikes a deal and finally gets that over the line. Paramount this morning is one of the lead stocks on the upside. Of course, there's the voting and the non-voting shares up 6.62%. So finally, will Skydance get their deal? How much are they offering? How much equity are they putting in and debt? SPOO's above 5,500 for the first time. Another one in the back of the net there, really. This is the 31st record of this year. Yesterday, you talked about the fog that Laurie Calvasina saw at RBC, and she was a nervous raise. Saw a few potholes out there. Her nervous raise takes her to 5,700. Tesla also having a banging run on their deliveries. Yes, we were waiting for that number. And again, Tesla carries through this morning up another 2.7%. When it comes to the bond markets, it was 5 words that changed the narrative. I mean, if you read Ed Yardeni's research, what he says is the Fed put is back. And that invoked some spirited attempt in the equity market, but also in the bond market. Powell's words, quite a bit of progress has been made and a gradually cooling economy. So the jarring of the door for a September rate cut just opens. We're counting down to the UK election. 126.96 is where we are. Cable is up for 5 days in a row. We haven't seen that in a while. I love what UBS say. I'll give you this, Danny. UK, an island of stability after 10 years of looking like the problem child of Europe. Maybe you should put your money in the UK rather than France. There you go.
I think we both took away that option when we moved from London, respectively, to Dubai and then New York. But, Menace, that record high I find fascinating because NVIDIA fell yesterday. We made a lot of noise on the way up that it was NVIDIA that was the pillar of this market. It was the only thing supporting it. Yesterday was a good example of how that's not necessarily true. NVIDIA falls by more than 1%, and the rest of the Mag 7 pick up the baton. So, okay, it's still not great breath, but it's the other ones like Tesla, Apple, Microsoft that carry this market further. So momentum is shifting, but it hasn't been violent. We're clinging on to, as Mike Wilson puts it, different lifeboats in this market.
Yeah, I mean, the air is getting undeniably thinner, or not, as the case may be, because the debate is this: we've moved from no landing to soft landing. The JOLTS number was a little bit of a surprise, I think, for everybody else. And then if you look at Sintra and the language in Sintra, the narrative, as I say, from Ed Yardeni, I was very surprised. The title of his piece this morning is that, you know, the Fed put is back because of Goolsbee and what Powell said. But Goolsbee's an archdove. So it's hard to understand where we are on the timing. But the data is certainly adding to the narrative of more of an assurity of 2 rate cuts this year.
Or just more confusion.
We'll take both.
Right. Well, I mean, this is the thing. Neil Dutta has been talking about cherry-picking data, that if you see basically a still strong government economy, what you're doing is cherry-picking. But that's all anyone is doing right now.
Yeah, but then we just sat down to look at some of the betting odds in terms of Biden being still in power and still on the ticket. And as we said, well, it depends which website you look at. You know, you can choose your narrative, you can choose your data to suit your narrative.
Yeah, it's a confusing time. And will ECB and Fed speakers clear it up for us? We have been hearing from them from Sintra. Chair Powell and President Lagarde spoke yesterday. And here's what they had to say specifically on the labor market.
We do think policy is restrictive, and we think that's appropriate. I think if you look at the labor market in particular, you're seeing demand for labor gradually come down in the form of job openings. You can see the labor market is cooling off, appropriately so, and we're watching it very carefully.
We don't need to have services at 2%. We have to look really what is behind it. And what's behind it is a lot of wages. Services has a very high component of labor. Wages also suffer from the lag impact of the labor system that we have in Europe.
There has been this slight shift where some of the doves have been getting louder, but is it enough? Ella Hoya from Newton Investment Management writes this: the Fed overall remains backward-looking. For the soft landing narrative to take hold, enough easing of policy needs to get delivered ahead of the cycle. That window has now closed. The Fed may not ease well into September. Ella joins us now, I'm pleased to say. Ella, so are we already in policy error land as it stands?
Well, we like to think probabilistically, and we would say, given some of the data surprises are coming on the softer side, and credit demand is actually also softening, so alluding to rates already being tight, as Powell was just affirming, then yes, I think probabilistically we would say the risks are for a much softer landing than the soft landing narrative would have you believe.
Therefore, do you believe that the velocity or the pace of disinflation speeds up from here?
We would think so. The odds are certainly in its favor, particularly with a 6 to 9 month window, so a little bit more short term. Medium term, the risks still remain that we get sticky inflation because of the structural reasons behind it. However, for the bond markets, I think this narrative around the next 2 to 3 quarters will be very important.
That's quite a complicated thing to try to wrap your head around, this idea that perhaps the landing won't be as soft as expected, but we are going to have a bumpy disinflation trend. So how actually are you positioning for that, Ella, of yes, softer, but yes, inflation spikes?
Well, I think the growth element will be important for now. Potentially inflation is what might keep yields from falling too much, right? So the corridor for rates is getting higher on the low side, and that's because of the shift we had since 2021. So there has been a regime shift in markets. However, what that means for us positioning-wise is now the odds favor you being long duration or having interest rate sensitivity. But in terms of where in the curve that would be, it's in the shorter maturity bucket. So because of the fiscal risks, because of the inflation risks that are still on the table for bond investors, that likely means more term premium and likely steeper curves. So that's how you marry the two together.
We've certainly seen quite an aggressive steepening in the past couple of days. I mean, we've looked at this a couple of times. In part, that's been driven by the political risk, Trump accession, inflation, tariffs, and immigration policy. So there was this narrative of a re-steepening. I just wonder to what extent now that is fully priced. I mean, it was quite a breathless spike in the 2s, 10s. Do you think that that steepening is exhausted and is only emboldened again if there is a real dramatic shift in the polls, again, further ahead for Trump?
The short answer would be no. So I think trend in steepening can continue. And if you think those are the only reasons that are driving the steepening, perhaps some of that is in the curve. However, let's not forget that it's quite typical of curves to disinvert and start to steepen as we head into recession periods. I know recession is a bit of a dirty word for markets right now, but if that is the case, then you can expect more steepening, also aided by the cycle. So particularly with this softer cycle view that we have.
What happens to the deficit if it is a softer cycle, Ella? Because now it's not that much of a threat. But what happens when this is a government where deficits are growing, but because of a softer economic environment, you're collecting less tax and paying out more unemployment benefit? Do we start caring about deficits and auctions in that environment?
Well, as late as yesterday, even the Fed was talking about the risks on fiscal and how fiscal deficits need to be tightened. So, of course, in the event of a downside in the cycle, then you can expect those deficits to widen. And this is what's kind of keeping bond markets nervous and likely to play out over the next few years or so. So I would expect that to continue widening.
Well, certainly we've been spooked before last autumn, weren't we, in terms of the auctions and in terms of the deficits. It's a question of whether that's amplified or multiplied. When we talk about real rates, Ella, looking at real rates, just under 1.99 is where we are. Again, if we're going into this slowdown, if potentially, as you say, that dirty word recession, I don't think anybody's there. I think that's still probably more a tail risk than consensus. But if we are going into this slowdown, how much or how big a scale of a cutting cycle do you think that we're in if real rates are just under 2?
Well, I mean, at least with positive real rates of those levels, you're getting some compensation for owning the bonds, even granted the fiscal risks down the road. I would say if we get into this cutting cycle and if it's a really softer outcome relative to market expectations, you can expect rates to drop to as low as 3%, I would say. You can always overshoot. As we know, market sentiment can drive things further. It was the case in December with the expectations on rate cuts. Why not on a next cycle, particularly if you have weakness economically speaking? So I would say 3% seems like a decent range. Perhaps given the longer-term fiscal constraints, that could be a good selling area, say around 3% or so. But I would expect that's kind of where we're headed.
I know we're talking about the medium term, but I want to talk about the next 2 days when there's a UK election and then there's a jobs report, not to mention at a time when most of the U.S. except Manus and me, will be at a beach somewhere in the world. Just what are you expecting in this period of, again, a heavy news flow, but potentially scant liquidity?
Well, I wish I was at the beach as well this weekend because there'll be plenty worrying bond investors. Of course, we have French elections as well. Let's not forget, right? That's also an important political risk. Look, on the UK side, we would actually say UK has a positive political backdrop from an investing perspective. So UK assets are attractive. We're actually positioned that way. UK curve is quite steep, so the long end of gilt is interesting. Pound is interesting, but you could even argue UK equities are also attractive if you're sort of a bit of a valuations-driven investor. So for the UK, less concerns. Let's see what the elections bring tomorrow, but I would expect a positive backdrop there. I would say in terms of the data on the job side, markets are pretty nervous. Job trends, particularly the forward-looking components, are trending down, and that's kind of what keeps us more in the soft landing narrative, if you like.
Double soft.
But let's see.
Double soft, Ella.
Exactly. Or
there
rough,
you go.
Maybe.
Soft squared.
Or rough.
Soft squared. Tell me this, before you go, you're at home in the UK. Do you think the UK, as UBS say, has become an island of stability after 10 years looking like the problem child? Wrap it up in 30 seconds.
I'm an optimist by nature, so I would hope so. And I love the city, I love the country. So I would say yes, why not?
Oh, politically very well played. Ella, thank you very much. Ella Hoxha there of Newton Investment Management in less than 30 seconds. Some of the stories trending on your Bloomberg terminal this Wednesday morning before you go to the beach. Brevin Howard is cutting the fees for their biggest fund to make up for high costs. The firm is reportedly scrapping 1% management fee for its Alpha Strategies fund until the new year. Many multi-strategy funds have been facing fierce competition for talent, forcing them to pay up to attract new hires, which contributed to rising costs.
Meanwhile, Apple is getting an observer role on OpenAI's board. Sources tell us that Apple's App Store head and former marketing chief Phil Schiller has been chosen for that position. They say the arrangement will take effect later this year. And as you'll recall, Apple announced that it would offer ChatGPT in its iPhone, iPad, and Mac as part of its suite of AI features.
European officials told Bloomberg that Chinese and Russian companies are developing lethal attack drones. They say the firms held talks in 2023 about collaborating to replicate Iran's Shahed drone. A version was reportedly developed and tested this year in preparation for shipment to Russia. In a statement, China says it does not provide weapons to parties of Ukraine conflict.
Well, coming up, we'll talk domestic politics. Donald Trump's sentencing delayed by a few months as the judge reviews the Supreme Court's landmark ruling about immunity.
And a multimedia merger is agreed. Is it? We bring you the details of the proposed deal between Skydance and Paramount. Are we finally there? We'll give you the context. It matters on Bloomberg every day. It's Bloomberg. Alongside Danny Berger in New York. Well, the sentencing for the former president, Donald Trump, has been delayed. We know that. The date has now been moved to September the 18th. So the judge in the case can review the impact of the U.S. Supreme Court ruling on presidential immunity. Kriti Gupta is with us now. So, Kriti, this is one of those moments of when the judge is reflecting on what the Supreme Court ruling might mean. And there's a growing narrative that the sentence may even be set aside.
There is. I mean, look, this has now been pushed back. The sentencing was supposed to be July 11th. It's now pushed back to September 18th. Now, on the surface, what this means is that this could eliminate something like jail time, which was essentially one of the options that the presiding judge, Juan Merchan, was going to talk about. And I should just put this into context. This is specifically around the case of the hush money payments to adult film star Stormy Daniels. Remember, there are other cases against President Trump as well, ongoing ones like the 2020 election. But what the Supreme Court decision has said is that even social media, any evidence brought into him or brought onto him from other cases during his time as president, that now all has to be taken out of consideration for the end casing. Now, because the decision has already been made on the hush money trial, that now affects the sentencing story as well. From a voter perspective, he is still a convicted criminal from a private act standpoint. The question is, does it just eliminate the jail time that was on the table?
Meanwhile, Critty, you have President Biden coming out and saying, and his aides saying, look, he had an intense travel schedule before his debate. It was a poor performance. But even so, Reuters has the story that 25 House Democrats are willing to call for Biden to step down if he seems shaky in the coming days. We've already heard people come out and officially say this. Lloyd Doggett, the Austin Democrat, among the Texas Democrat, among them calling for him to withdraw, of course, your home state of Texas. I mean, him saying that he's been traveling and that's why he sounded rasped. Is there any degree that this is resonating with the party?
I mean, look, we've heard this time and time again from his administration and his campaign, first attributing it to a cold, then attributing it to the jet lag and simply going around work. But Danny Manis, I don't have to tell you, the morning shift takes a toll on us all. What's important to keep in mind here, though, is that one of the concerns, and this came up before he even announced his re-election bid, is who the alternative actually is. If you look at the polling results, you do start to see a little bit of drop in Biden's numbers, not just against President Trump, but against candidates who aren't even expected to be on the ballot, like Gavin Newsom, like Kamala Harris. They are still polling lower than Biden, but the direction of travel is noticeable. It's also important to keep in mind simply that this all goes to the virtual roll call expected to be July 21st when he's expected to be the presumptive nominee.
Kriti, thank you very much for that. That is Bloomberg's Kriti Gupta. Okay, let's turn to the media industry now. And reports say film and TV producer Skydance has reached another agreement. This time it's a prelim agreement to buy Sherry Redstone's National Amusements and merge it with Paramount. So in sum, to buy Paramount finally. Charlie Wells joins us again a mere 24 hours after joining us on this deal before, but it was with Barry Diller. Now it's with Skydance again. I mean, Charlie, just help us make sense of it. Are we there? Is it finally happening?
Danny, I think to make sense of it, we've got to look back to some rom-coms. This is Hollywood we're talking about, after all. And really, this is a suitor from before coming back with sort of the same contours of a deal, but sweetened, just like you see when a suitor comes after somebody in a rom-com. And what we know here is that Skydance is still, in this agreement, attempting to buy National Amusements. Now, that is the controlling shareholder of Paramount Global. So they would buy National Amusements, but then merge with Paramount Global. The sweetened elements here that a person with knowledge of the matter told Bloomberg is that the valuation for National Amusements is higher than it was last time. And also, this is a really interesting sticking point, that the language indemnifying Sherry Redstone, the head of National Amusements, would be stronger than it was previously. Now, we know that Sherry Redstone was spooked by a lawsuit during the fallout of that CBS-Viacom merger. And so in the event of litigation from this potential deal, the protection there would be stronger. So those are the two changes that seem to be emerging from this preliminary agreement.
Well, certainly it's going to come down to the dollars that are offered. I think the previous offer was around $2.25 billion, and an injection into Paramount's balance sheet. Obviously, they've got a hefty debt load. If we were to talk about the probability, I mean, Danny and I sort of in the headline saying, finally, are we there yet? It's almost like a road trip with your parents. Are we there yet? Are we there yet? The likelihood that this deal gets done over the approach by other parties that we've seen, as Danny said, from Barry Diller, what makes this format much more appealing?
Yeah, man, I mean, this feels like a movie that you think is going to end, but then it just keeps going and going and going. And I think one of the issues from last time was that issue of shareholders, the non-Redstone shareholders in National Amusements. Now, they had some pushback over that idea of the merger between Skydance and Paramount. Now, what the Wall Street Journal has been reporting is that a majority of those non-Redstone shareholders would not need to approve that merger. But what is also apparent is there is a 45-day go shop period with this potential preliminary agreement, and that would allow other bidders to still bid on Paramount. Okay. So this could be a continuation of a long journey.
Charlie, we'll keep our viewers appraised every step of the way. Charlie Wells, we have done so far. Context matters on this deal every day on Bloomberg. From a beautiful New York, good morning.
let's get you some front page news and headlines around the world. Man, as the New York Times has this, that Biden's lapses are said to be becoming increasingly common and worrisome. That's according to people who have spent time with the president. They say that he appears confused, listless, loses threads of conversations, and more often. And this, of course, is a problem because someone like Nancy Pelosi is talking about, look, everybody has bad debates. But the question is, this isn't a bad debate, is it? It's something that is increasingly common per sources by the New York Times.
Look, a lot of the betting sites are going hard and heavy on the probability, a less than 50% probability that he will be the Democratic nominee. This is just one site. This is Predict. There's Betfair. Look, choose your site. You can build your story, but the question is mounting. FT runs with the spotlight on tariffs. The EU takes aim at China's Temu and Shein with proposed import duties. European Commission suggests scrapping the €150 duty-free threshold. 2.3 billion imports into the EU are below this last year.
And I'll just leave you with this. The Journal has this fascinating story, Manis.
Story.
I would recommend reading it. It's about an underground network of people sneaking NVIDIA chips into China, not enough to power industry, but enough for researchers to get their hands on.
And these are students. They're being paid, we understand, according to the Journal, about $100 per chip. But to put it in context, we're talking about 12,500 chips, and NVIDIA produced 2.6 million of high-powered chips last year.
Yeah, but again, it's who gets their hands on it and what can they do with it in terms of research and building their own. Good morning from our global headquarters in New York. I'm Danny Berger alongside Manis Cranny. Let's set your agenda.
The S&P 500 closing above 5,500 for the first time in its history. It is the 32nd record this year as Powell signals inflation is on a downward trend. Sentencing delay, the Supreme Court ruling pushes back Donald Trump's day in court 2 months, while Biden blames travel on his poor debate performance. And finally, are we there yet? Skydance is said to offer a higher valuation to close the deal with Paramount. Danny, I can't wait for that deal to close.
You and literally everybody else, probably Sherry Redstone included. In the meantime, 32 record highs. That's where we stand. It was also another record for Mag 7 yesterday, too. But all of this without NVIDIA, without the help of the thing that we said was the pillar for this market and the only thing supporting it. Maybe there is more widespread bullishness than we thought, but it is tech that continues to lead us. S&P futures, they are little change this morning. NVIDIA down yet again in the pre-market trade. U.S. 10-year yields, those are little change, 4.43%. It was this push and pull yesterday. You had the pull from Powell, from a more dovish sounding Powell, perhaps. I mean, he's always kind of sounding like that. And the push of JOLTS data that was unexpectedly strong. RBC points out perhaps it's just the boomers retiring, and that's why the JOLTS data looks like it is. Meanwhile, NYMEX crude trading around a 2-month high. The risks are there from a hurricane coming up through Jamaica and into North America. That's Hurricane Beryl, and also signs of a U.S. inventory drawdown. But man, it's just to kind of linger on Powell. We've heard the doves really start to come out more. They're not saying we're there yet, but they are getting louder and more bold, whether you look at Powell or someone like Mary Daly.
Yeah, and again, they are leaning into the dual mandate. Powell talks about things being finely balanced between inflation and jobs. Mary Daly talking about a pivot point, a turning point. And I will remind you of one thing in regards to boomers retiring. There was a producer that suggested to me that I was a boomer. There was a magnificent silence at that moment in time. Technically, I don't fall in.
I was going to say you definitely don't fall into that.
You know, I might have the attributes of a boomer, but I don't technically fall into the category of it.
I'll have everyone know that Manis is great at social media. Boomers famously are not great at social media. So there you go. Listen, there's some evidence in your camp.
We joke a little bit about Dan Ives. We have Dan Ives on quite often. Yeah. We speak to him on Surveillance. We speak to him on this show. And we know that he's an evangelist of tech. The tech melt-up is beginning. Another 15% on the upside. He's evangelizing about Tesla. The story has begun. Of course, we know that's counting down to robo-taxis. And if you look at the outperformance in Mag 7, it is Apple. And it is Tesla.
I was going to say yesterday was a really good day for his thesis. Tesla is what carried the market yesterday. But again, I still come back to this thing, Manis. How long did we talk about that? Once NVIDIA turns, the rest of the market will turn with it. There feels to be a momentum. Exactly. Yeah. So maybe this is, okay, not the healthiest of markets, but maybe a little bit healthier than we thought.
But look at the dynamics. It's the push and the pull. It was the drag of Tesla, which was, you know, sort of the unloved child, and it was this nadir, versus the upside that was NVIDIA. And so we have this slight inversion. Probably everybody's sending IBs on my theory is wrong, but that's mine.
No, I love it. Again, Mike Wilson talked about this idea of a boat, and when one side tips, you run up to the other side. It tips the other way. And so what we're seeing is just this running back and forth. So it was, again, a record high on the S&P 500. It's 32nd record high of the year. 5,500 for the first time ever. Let's bring in Bloomberg MLive reporter Noor Al-Ali to talk about this. And Noor, again, I am gobsmacked by the idea that we can get here without NVIDIA because this was the pillar. So what do you make of the 32nd record high for this market?
Good morning, Danny, Menace. Look, Danny, you're talking about that boat tipping and going from one side to the other, but at some point you're going to want to jump, right? And that's what hedge funds are starting to do. They're starting to cut their exposure to U.S. stocks. They did that in June. They've cut their exposure to tech. They pivoted back into energy as well. And it's showing you that, yes, potentially we are now seeing some laggards or some underperformers really start rising, because what the market is doing really is profit taking from those names that have done very well and going into those titles as that Goldilocks narrative continues to carry itself. But I think really payrolls is that time, or is that data figure that's really going to start shifting the narratives here. Is it going to show that the labor market is actually weakening? Yes, I know JOLTS data did come out yesterday, but that is a backward-looking data set, so I wouldn't really give that much weight. We're talking a lot about, the SAM rule and whether or not it would be triggered. My colleagues Mark Cudmore, Simon Flint have discussed this thoroughly as well. So I think now whether the unemployment figure rises, the unemployment rate rises up to 4.1%, could really be that tipping point for a lot of people in the markets to start saying, okay, maybe the labor market isn't as strong as it is, and that's the economy turning. And when that happens, that's when you're going to start seeing more voices rising about the fact that this rally may not have the fundamentals to support it.
Yeah, and then this is where, as we said a little bit earlier, the dual mandate comes into play. You're hearing it from Mary Daly. You're hearing it from Powell yesterday. He's talking about a gradually cooling economy, a gradually cooling labour market. Quite a bit of progress on that side. The number we're looking for on jobs is 190,000. Danny and I will be here to bring the market through that, and a 4% unemployment rate. There's a small issue of a UK election. UBS say that maybe where you are is the island of stability after 10 years of looking like a problem child. So sterling's had a nice run up into this. So does that kind of narrative hold? Record highs in UK equities, sterling's on a run higher. But of course, we have the debate around whether Biden will be on the Democratic ticket. That clarion call is rising against Biden.
Yeah, absolutely, Menace. And look, that election risk, we've talked about how this year is going to be a big year for politics, and that read across for markets has continued to come through. It's instilled a lot of volatility into assets, and luckily for the UK, it's looking like it's a lot calmer now in the political front compared to its neighbors, particularly in France. Now, there are some risks in the UK, right? Like, we still don't really have a lot of clarity on fiscal spending from whichever the winning party would be. Whereas in France, for instance, you have long-term fundamentals that are essentially negative, especially those high debt risks that they've got there. And regardless of the outcome come Sunday for France, that's still an issue that whoever wins, or whatever, political dynamic, whether hung parliament or the far right winning does take place, that's definitely going to play out into markets and those fears. And that's why you see those spreads widening in France relative to its peers. But in the UK, as you say, it's a lot calmer. There's a lot more confidence.
Yep, and that's certainly reflected in the currency, the equity, and in the bond markets so far. Noor Al-Ali, thank you very much. Setting us up nicely for our next guest, who writes this. There is no massive build-up of debt in the corporate and the household sectors, which would normally carry the risk of a debt meltdown and or a massive investment consumption retrenchment. Resilience of corporate profit and investment cycles is with us. Our guest is Sharmila Whelan, Chief Economist at Westbourne Research Services. So, Sharmila, good to see you this morning. With that backdrop, obviously, it's not 2008, it's not a debt crisis that we seem to be facing at the moment. Danny would probably be able to tell us the details on private credit. But for you, is it going to be a soft landing skew? I mean, our last guest said a soft landing with the soupçon risk of recession.
Hi, Manus. Yeah, I'm looking at a soft landing for the reasons that you've outlined, the ones that I've put up there. Yeah, the US economy is slowing. There's no doubt about it. We've seen GDP growth slow in the last 2 quarters to the first quarter. We're seeing non-payrolls, wage growth, hourly earnings slowing. And if you look at real wages, it's flat, right? And households are feeling the pinch. They're becoming more price conscious. So you are seeing the slowdown for sure. But as I say, there is no massive debt buildup in either the household sector or the corporate sector. The debt problem is on the government's balance sheet. And therefore, I'm not looking for a recession or a massive slowdown.
Right. So, Sharmila, how much do you worry about that debt buildup on the government balance sheet? Because you look at this bond market, and someone like Stephen Major would argue it's already priced in. The premium's already there. But then you look at auction after auction this year, well, maybe you see bumps, but they still go smoothly. So how worried should we be, especially when we look into the fog of 2025?
Yeah. Well, Danny, very good question, because when you look at, a debt to GDP ratio of 124%, you go, wow, that's big. But then you could also argue Japan's is over 200%. But the main thing in favor of the US is the dollar is still the international currency of world trade and capital flows. And, you can continue to abuse your fiscal position because you've got seniorage and you're the other thing. So it is a concern. But it's much more difficult to see a fiscal debt meltdown than you would in a smaller country, an emerging market like India or Indonesia, or for even an advanced country like Europe.
Tell me this, Sharmila, then, in the next 6 months, in the next couple of days, we're going to have pretty spiky volatility. We sort of know the outcome of outcomes in the UK. In France, it may be a little bit different. You're commenting about the dollar there. We're expecting a shallow rate cutting cycle from the Fed. That's the consensus at the moment. Given the political, the fiscal, and the Fed backdrop, does the dollar still remain triumphant in that global backdrop?
I think, it's like what we're going to see in the equity market, right? Where my view is that you're going to see the rally continue. It's going to be broad-based. Coming on to the dollar and the currency market, similarly, I think you'll see volatility around it. And there are some very real concerns that you've just outlined. But I do see dollar resilience, right? Because going back to the point that you made, that the Fed's going to be slow to cut rates and quite measured. And again, also the US economy is slowing, but it's looking at a soft landing.
Sharmila, I mean, part of the reason there is this volatility is because the volatility in the data. You look at things like a household survey that shows significant weakness in jobs. You look at the jobs numbers, the NFPs, it still shows some strength. You get JOLTS data, which also shows strength. It's what Paul Donovan at UBS is talking about this morning, that Powell seems to have trusting belief in the precision of economic data, but the declining accuracy of data reduces certainty about the state of the U.S. economy. Are we being data dependent, Sharmila, on data that is not dependable?
Danny, that's another very good question. And certainly the Fed has been very bound by the data, and data that is not very reliable, and they've been slow to move. But, as an economist, speaking as an economist, you've got to be looking at the underlying fundamentals of where are you in the business cycle, what's happening to liquidity, what's happening to broader economic activity and leading indicators, because, things like employment are lagging indicators. Again, even inflation is a lagging indicator. You need to be looking at more intrinsic ones, like what's happening to the corporate profit cycle, what's happening to the investment cycle, what's happening to monetary aggregates. So to answer your question, I think the Fed is being very bound by the data, and the data is unreliable, and that is showing up in their hesitation to move.
Okay. Sharmila, thank you so much for that. A wider breadth of data is maybe needed. Sharmila Whelan of Westbourne Research Services. This is Bloomberg Brief.
It is Bloomberg Brief. I'm Menace Crenny alongside Danny Berger in New York. Marine Le Pen's National Party is facing an uphill battle to form a majority in the second round of the French legislative elections. They come this Sunday. President Macron's centrist group and left-wing alliance are racing to coalesce in opposition to her front-running party. Let's get a little bit more with Chad Thomas. He's hunkering down in Paris. It's going to be a long run for you, Chad, through to Sunday night. I hope you got the coffee and the croissants to keep you there. Talk to me about this unwilling or willing coalition, which is an anti-national rally. Just what exactly are they tactically doing to challenge Le Pen?
Hi, Manus. Well, it definitely is an unwilling coalition, although there's a tradition of it in France. This is what's happened before in elections, both in legislative and presidential elections, where basically all the parties who are not the far right, the National Rally, Le Pen's party, they kind of banded together for the second round in order to block her from either in the presidential election last time around winning or in the parliamentary elections taking a majority. These parties don't, in the end, really have a ton in common with one another. You have the very far left party, France Unbowed, all the way over to Macron's very centrist party, all sort of agreeing that they would pull candidates from the second round in order to try and stop Le Pen's candidate from winning in those runoff races. There were more than 300 of the 577 electoral districts that were set to have 3 or more candidates in them in the second round. As of yesterday, 6 p.m. yesterday local time, they had until then to pull out candidates, and by our count from French media, more than 200 of those candidates have been pulled out by these parties in the center and on the left. So we'll be waiting actually to hear more from the Interior Ministry today, where we'll get the actual official data on how many
Chad,
of these
if I can
locations have a 3-way or 2-way.
Given
Go for it, Danny.
Because this is what markets are worried about, right? That the National Rally grips power, that it's a more right agenda. Does this calm markets, this feeling of maybe some center will prevail?
Yeah, so the markets, as you say, Danny, have been really all over the place. And when Macron called this snap vote, we had a huge market reaction. They've bounced back a little bit, and today the CAC was up 1%. It's still, though, down about 5% from when Macron called the snap vote about a month ago now. We've been hearing, though, from market participants who also say, like, look, the markets, yes, this is calming for them if they think that the far right isn't going to win a majority, but they should remember that the end result will be likely, if they don't win a majority, that there'll be a hung parliament, and that isn't great either in terms of doing things like bringing down the budget deficit that is a real problem in France as well. So it looks like on Sunday we're headed for, which is the worst of two evils here, really. There's no outcome that is being predicted at the moment that would suggest that there's going to be a parliament that allows Macron to push on with a lot of the reforms that he's been trying to put in place. And in fact, some of those reforms might get rolled back.
Okay, Chad, thank you very much. Bloomberg's Chad Thomas. Enjoy as much as you can the rest of your time in Paris. Now, there's another election we have to keep track of. It's in the UK, and for the 4th of July, the Britons are going to the polls. They look set to vote for a Labour government who have been polling far ahead of the Tory government throughout the campaign. Let's get to Bloomberg Economics' Dan Hansen on this. Dan, okay, so if we have a Labour government in, Katie Martin over at the FT wrote this wonderful column, and she said the market knows the difference between someone who's borrowing in a suit and someone who's borrowing in a clown suit. So is the Labour government someone who's likely to borrow money at a suit and keep this market calm?
Yeah, morning, Danny, morning, Manus. So, I mean, if you look at the Labour party's manifesto, they're not going to borrow much money at all. In fact, their fiscal offering is tiny. It's about £9 billion of spending they're pledging and £9 billion of tax rises. So very, very small in the context of a £3 trillion economy. I think the key point, and it goes to the point being made in the FT article, is that if you do borrow money, it has to be credible. And if we look back to 2022, what happened in the UK, markets look at fiscal plans, and if they don't like the look of it, you get this big sell-off. But I think what will be interesting, it won't be initially, but in time, if Labour do come to power, is what they do, first of all, to create some fiscal space, because there's essentially none in the UK. And second of all, if they do create that fiscal space, what they'll do with it. And their markets will be looking for a credible plan. And if you want a credible plan, you have to focus on investment spending. It's not sort of day-to-day government spending, which is deemed wasteful, and it's not tax cuts either. So I think if you want to borrow more, you have to be credible, and the source of credibility and where credibility lies, at least when you think about fiscal policy, is probably in investment spending, because that will essentially help boost the long-term capacity of the economy.
Dan, good to see you this morning. Let's see what the election brings. You've done some good work in terms of where they will spend. You talk about a housing blitz. You talk about the ability to maybe move some of the dial when it comes to investment. Look, does this shift? I mean, my favourite line of the day goes to UBS, I got to say, which is that the UK will become an island of stability after 10 years of looking like the problem child of Europe. But from an investment perspective, the currency, sterling is reacting fairly well at the moment to the prospect of a Labour government. The equity market, global equity markets are rising, so I don't think we can hand the mantle of an equity market rally to Labour. But right now, there's no whiff of panic or high vol in sterling assets right now. The market has coalesced around this. It's just a question of the size of the supermajority and what policy comes down the track in the autumn. Maybe that's when we wait for a dislocation.
Yeah, I mean, I think that's right. I mean, you've got the question really is, as I say, the manifesto is very, very modest, and Labour are campaigning on the idea that they will bring stability, and there will be some premium in the UK for investors, but also for the economy of bringing stability to the UK. I think the question is, and Labour, just the background to this, Labour are going to inherit an economy that is recovering pretty quickly. The question is if that growth begins to falter, and if the economy goes back to sort of it's going along at a relatively slow pace, then the question is, what will they do? And I think that's what investors will be focused on and what their plan is there. And as I say, our view is that if they are going to do something, it should be focused around investment spending.
OK. Dan, thank you very much. Those polls open tomorrow morning. Britain goes to vote. Dan Hansen on the UK. Context Matters on Bloomberg.
Let's get you set up for your holiday shortened day. New York Fed President John Williams will be speaking in Sintra, 7 a.m. Eastern. Plus, we'll also get Fed minutes at 2 p.m. Then it's a slew of eco data, jobless claims, ISM services, Fed minutes, because tomorrow markets are off. And because of that, Manus, U.S. markets, they will be closing early today.
They will indeed. Of course, we'll get the Fed minutes a little bit later on today. We'll cover those micro movers for you. This is what we got. We got Paramount. There's a shocker. Up 8.86%. Will Skydance bring it over the line and do a deal with Paramount? Eli Lilly wins FDA approval for a new drug to slow Alzheimer's disease more than 3 years after it showed promise in the clinical trials. And Tesla romping it home, up 3.5% after the car maker reported deliveries. I mean, that was a nice run up yesterday. I think we're up 10%, 11% in a couple of days.
Yeah, again, it was the biggest mover in the S&P 500 in terms of points,
and
lifting it up. Yeah, so, NVIDIA goes down, Tesla picks up the mantle. Probably Tesla will go down and someone else will pick it up until we crash. I don't know.
Question is, just how much more dovish narrative will you get from Sintra? Because apparently we're making quite a bit of progress on inflation.